Welcome to Capital Call, Boyden's podcast series of conversations with private equity and venture capital firms from around the world. In this podcast, Boyden China partner David Lawmanco speaks with Richard Wang, partner at Dragon Fund.
Good morning, Richard. Thank you for making the time. Really appreciate it. And especially also to spend some of your time to participate in our first in the series podcast interview from our global PVC practice group.
No problem, my pleasure.
So if you don't mind, before we start to go in, we have a couple of questions. So if maybe you could introduce yourself and also about Dragon Fund, please.
Yes, sure. So yes, everybody. My name is Richard Wang. I'm Taiwanese, but I work in China for about 16 years already, and I was entrepreneur before I get into the venture capital field. So I joined DFJ Dragon since 2011. So DFJ Dragon actually is a joint venture fund from Dragon Venture with DFJ together since 2005 actually. So at that time, all the management team is in Silicon Valley, and we find the China market is very aggressive and very interesting at that time, 2005. So we talked with Team Draper and trying to have a joint fund in China and focus on China's startups, but with the offshore structures. So that's how we work with DFJ. Then since 2005, we have DFJ Dragon us here in China, and two offices, one in Shanghai and the other one in Silicon Valley with Team Draper together, also with DFJ together. But in about 2012, I believe so, or 2013, that we follow the instruction from Team Draper that we like to rebrand all the DFJ affiliation worldwide into Draper affiliation. So we all changed the name from DFJ Dragon to Draper Dragon in China. And about 2012 or 2013, we have our first RMB fund that will focus on China domestic company, China domestic startups. That's our first RMB fund, number one. And then 2015-16, we have RMB fund number two and number three. And then in 2013, because we also quite focus on blockchain area, so we have so-called token fund or say crypto fund in 2017. So after that, we have several sectors. We would say three big sectors. One is TMT again, and one is healthcare or say medical sector. The third one is blockchain sector since 2017. So that's our focus. And we still focus on very early stage deal so far today.
Right. Thank you, Richard. So one of us first key question. So looking at your portfolio companies and how they have dealt with the coronavirus pandemic,
right.
What are the factors that have made some perform better than others?
Right. Okay. Yes. Indeed. From the very beginning of this year, right. A lot of our portfolio company, they face a lot of challenge, and I'm not able to say if they are doing better than others, because some of my portfolio company, they does get better revenue, because they are in healthcare sector. Sure. But some company they lose some business for sure, right? And I believe, but some company they do take some action. For example, they have headcount freeze, or even they lay off people and try to thin the company size to keep the financial performance healthier, because they need to survive and they need to prepare well. And after this pandemic, right, they are able to get back their energy, right, their momentum, and get move on. So right, I believe some of our company does take the action like headcount freeze, like lay off people, and the other action they may take is they create some new market. For example, no matter hardware or service, right? Yes. For example, one of our company they're doing the hardware device, electronic devices. So okay, when this happened, they just create another new business line to design more product for sterilization market, for example, right? So
Sterilization.
right, sterilization, yes. So I mean, the other way is they either to headcount freeze, keep themselves safe, right? To cut the expense.
So
and
one
the other
side,
way,
the pandemic actually has driven them to take some cost cutting, right? Cost
Right.
optimization measures. But then on the other hand, also has create
a new market, yes.
opportunities.
Right.
Sure.
right?
Sure. Then my next question. So for many businesses, the pandemic has affected the approach to hiring, permanent or interim, at the executive level. So which skills and competencies do you think are critical now for a CEO and his and her team?
Yes, I would say definitely the risk management. So people always know, when you got the risk, you meet some challenge. You need to have a better C-level teams to deal with that, right? So, but what is the exact action they need to do? I think for some example, for some board member, they need to give very clear strategy about when they face this kind of pandemic things, right? Very clear strategy to tell to the CEO, okay, what something you should do and something you should not do, for example. And also the C-level teams, they need to have very strong, very effective execution capability than before, because this challenging, right? So I think also we need to find a CEO. We have to make sure the CEO has very good vision to see the potential when they meet this kind of challenge. They need to have some kind of intuition, have a good vision to see what is the possibility in the coming future. So I think that's very important characters for those teams.
So you talk about resilience, identify new market opportunities. You talk about risk management. So talking about, for instance, so which function within an organization, if any, do you think has gained in importance, and how would you realign strategically for the future?
Yeah, we do think about this all the time. You know, for a very stable team, or they already do the very regular normal business, right? They don't really need other advisors or other advice from outside. But from this pandemic things, we think the very like a outside advisor or say independent advisor is very important, especially the advisor, the people is very resourceful. So when this coming, the pandemic things, right, this resourceful guy are able to bring some, for example, some new valuable stuff, or they can bring you some new idea, and that is definitely going to help the company to step forward, okay, to move forward to next step, right? So I think when a regular company, they don't think about this outside advice, outside resources. But for resource, they need people to bring the resource. They need people to connect them, okay? So I think in the past, for the regular company, they don't think that the independent advisor is so important. But when pandemic happens, I do see that would be a very valuable asset to a company.
Because of the also uncertainty, lack of visibility.
Yes, right. Because it's so-called
disruption.
Right. The risk is the accident. The risk is not able to be predicted, right? So, but the resourceful people that are able to help you when this happens.
Sure. The crisis has accelerated the digitalization processes in most of companies. So what does it mean in terms of opportunities and threats for a fund like Dragon Fund?
Right. This digitization, well, actually does help some case in our portfolio company. For example, one of our portfolio, they do the remoting office product, so they get a better revenue growth this year, also the profit. And as I mentioned earlier, the hardware company, they do the hardware. So for this pandemic, well, indeed, some of our portfolio get the benefits from these things. It's really it's not good to say, but it's truth, right? Anyway, but for our fund itself, well, I think it's more difficult for us because now we when the deal comes, right, we cannot do the face meeting. We can only do the video conference, and even if we would like to go further, then we need to do the due diligence, right? It's not something you can do virtually or online. You need to do the site visiting. So for this, I don't see any even a video conference or some online internet tracking. I don't see this kind of digitization is going to help the VC a lot, especially for the deal flow, the due diligence process.
Sure, which you still needs an in-person.
Right. So I would say for this year, most of the VC or PE fund they got slower movement than before.
But now things, I mean, particularly in China, are quite back to a normal level now.
Right. For China, well, yes. For China, I would say compared to Europe or US, right? Now we have a better. I guess we do better social distance before, so now we have a better situation now. And I would say not just for the regular business, but also for the commercial, for some other lifestyle activity is get back to normal now.
How has the pandemic changed your access to potential deals and to the due diligence process? What are you doing differently?
Well, as I mentioned, we have a more video conference, and we would do some online roadshow as well. So the deal, the company, they just to present online by Zoom or by whatever the video conference tools. And then we do the online roadshow, and also do the ourselves also do some kind of online forum, right? To speak for ourselves, what we like to do, what we like to see, and we invite all the entrepreneurs also come to online together to present their stuff. So we do something more online, right, compared to before.
But now things come back to resume to the more
regular, right, normal situation. So but you know what? When the online visiting, online video conference become more usual than before. So
the new normal.
Right. So I guess we are okay with that. But when we need to do the site visiting, do some, for example, due diligence, to have a first meeting with people, we still need to visit anyway, right?
So you need to find some ways, right, to do that at some point, right?
Right.
Sure. And my last question, Richard, in the coming months, as the M&A market moves again, what will be the greatest opportunities for you and your business?
Right. Yeah. Indeed, the exit is easier than before, I would say. Especially the A stock market is better, right? So some public company, they have money to do the acquisition, and also the Shanghai is a new exchange, right? They support and encourage the technology-based company. Even they don't have any profit, okay, but they focus on the innovation stuff. So I would say no matter is listed in the public market, or the acquisition is much easier than before. So it's good for our fund. To be honest, actually we have 2 companies just get listed in Shanghai New Exchange this year. We have 2 portfolio, and I believe we are going to have another 2.
Which one?
Listed in Shanghai. The company called JJE. They do the motors for electrical vehicle.
Oh, okay. Which is now quite hot now. I mean, getting a strong momentum now. EV
and
market.
The other one is called, I'm not quite sure their English name. Normal Beam in Qingdao. They do the medical devices. So again, the market is hot, right? So they got listed this year, and I believe they were going to have a very good PE ratio. So good for us.
Good for us, exactly. Well, thank you very much, Richard, for your time and all those very valuable insights. And look forward to our next interaction. Thank you again.
Yes, sure.
Thank you, Richard.
Okay, no problem. Thank you.
You've been listening to Capital Call, Boyden's podcast series of conversations with private equity and venture capital executives. To learn more about Boyden's private equity and venture capital practice group, visit www.boyden.com.